Hey, it's Rob Minton with another Cash Winner video. In this video, I want to share how you can protect your wealth or maybe use your wealth to buy financial freedom. And this video is somewhat timely because there's a lot going on in the real estate market. There's a lot going on in the stock market. There's a lot of risk in all of the markets today, right? But the cool part is that if you own any stocks or real estate, you've probably experienced significant rates of appreciation over the last few years. So you have the opportunity to potentially use this appreciation to buy time and debt freedom going forward. And so in this video, I want to really talk about that. And I'm going to refer to a great book, and I'm going to also refer to my favorite movie scene from The Gambler, which Mark Wahlberg's character has lost a bunch of money gambling, and he's trying to get money to go back and gamble so he can win all the money he lost. So he approaches John Goodman, who's a loan shark, and he's asking to borrow money for one more shot to get all the money back that he lost. This scene is so powerful. I've watched it, I don't know, 700-800 times, and I know it word for word, but I'm gonna just read it so I don't mess it up for this video. So before Goodman agrees to loan Wahlberg the money, Goodman says, "I need to know that you've got the brains to fucking walk when it's time to walk. Most people don't, right there. Most people don't know when it's time to take chips off the table. They don't know when it's time to walk away and have time and debt freedom." And here's a part of this that pertains possibly to you and I. You get up $2.5 million. Any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible economy shitbox car, and you put the rest into the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of fucking solitude. That puts you for the rest of your life at the level of fuck you. So what he's saying is, if you have a large financial gain, you take those chips off the table and you use them to create a financial base for your family. That financial base basically is the position of FU. No debt, assets providing income. And to illustrate why that's so important, I'm going to go back to this scene. And this, I think, is probably the most critical part of what Goodman says.
If I give you this money and you don't pay me back, there are no rules. You never get to say fuck you to anybody ever. You will get me not just what you owe me from your family, you will get me their accounts so I can have them vacuum from Russia. You jump off a bridge, you can do it knowing I will kill your entire bloodline. Do you understand the gravity of your situation?
Do you understand the gravity of your situation? If you get up, you get out. If you do not get up, take chips off the table when you have the opportunity, you will never be able to say fuck you to anybody ever. That means you will be forced to go do things you don't want to do for money because you did not get out. And why am I so passionate about this? It's because I was in this exact same scenario many years ago. I was up big financially. I did not take chips off the table. Market crashed. All my chips were gone. I did not get out when I had the opportunity. It was a massive financial mistake that I made, which is why I write the Cash Winner newsletters, which is why I'm not recording these videos. I'm trying to help other people avoid the mistake that I made. And the crazy part about this is that before that big loss that I experienced, I was not really paying attention to risk. I was not studying people who lost lots of money. I was not learning from the mistakes made by others, which I'm certainly doing now, which leads me to what I want to share next. Back in 2019, I read this book titled The Education of a Speculator. It was written by a gentleman named Victor Niederhofer, and I don't remember exactly, but Niederhofer was a speculator. He made large gambles in the stock market and was very successful for a short period of time. But like most speculators, he ended up losing everything. And in this book, chapter 2, which is gold, which is maybe something, if you don't want to read the whole book, track it down and just read chapter 2 alone because it's priceless. But I'm going to share 2 key things out of this chapter that I think will be helpful for you. So oddly enough, Victor's book, he's writing about stock market panics and stock market crashes, and he talks about Jesse Livermore. And if you don't know who Jesse Livermore is, back in the 1920s and 30s, Jesse Livermore made several fortunes in the stock market. He went bankrupt, he went through a lot of financial struggles, and he's basically trying to learn from Jesse Livermore, but he ends up making the exact same mistake himself. So I'm going to read from this book because I think it's really important and it connects directly to what I'm sharing in this video. So this is what Victor wrote. So prudent was Jesse that he took account not only his own personal weaknesses, but those of an all too devoted wife. Okay, and now he's going to quote Jesse, and you can find this in actually Jesse Livermore's book, but I'm just going to read it from here. After I paid off all my debts in full, I put a pretty fair amount into annuities. I made up my mind I wasn't going to be strapped and uncomfortable and minus a stake ever again. Of course, after I married, I put some money in trust for my wife, and after my boy came, I put some money in trust for him. Okay, so he had a big windfall in the stock market. He paid off all his debts. He put money in a trust for his wife and kids, and here's why. The reason why I did this was not alone the fear of the stock market might take it away from me, but because I knew that a man will spend anything he can lay his hands on. By doing what I did, my wife and child are safe from me. He's saying that he knows he has greed and he operates with greed, and that greed kind of compels him to make irrational decisions in order to make more money. So by taking gains off the table, paying off his debt, putting money in trust for his wife and kids, he's trying to protect that money from himself and from future market crashes. But there's more. More than one man I know has done the same thing, but has coaxed his wife to sign off when he needed the money and he has lost it. But I have fixed it up so that no matter what I want or what my wife wants, that trust holds. It is absolutely safe from all attacks by either of us, safe from my market needs, safe from my devoted wife's love. I'm taking no chances. So he took money off the table. He used it to create a financial base that cannot be touched by him or his wife, and it cannot be impacted by the stock market. And this is so critical because of what I'm going to read to you next. And this is actually written by Victor, not Jesse. Jesse had gone bankrupt at least 3 times before the 1929 crash. He put his last chips in during the early 1930s and was wiped out. He flitted around Wall Street for another 10 years trying to scare up another stake. Finally, near the Wolf Point, he tried to recoup by selling a book of his insights. When that failed too, he penned an 8-page suicide letter at the Sherry Netherland Hotel and blew his brains out in the hat check room in 1940. See what I mean? You got to take chips off the table. So to consider this opportunity for your family, let's talk about getting up. What does getting up mean? And I'll give you a couple ideas. Number one is if you have any non-income producing assets that have appreciated in value and you have a lot of equity in those assets, you may have an opportunity to use that asset to trade that gain for your financial base for financial freedom. If you receive a large inheritance, instead of spending that money or buying a bigger house, use that money to create your base. Take that money off the table, use it to create your financial base, the base that John Goodman suggests. If you've won a lottery or had any speculation, maybe you invest in the stock market or crypto or something, you have these big gains sitting there, consider taking those gains off the table and using them to buy your base. Have the brains to walk when it's time to walk. So let's talk about getting out or creating your financial base. And there's really only 2 strategies to do that. One is you use the gain that you've received to buy unleveraged residential real estate. And the reason why I recommend residential real estate is because we know that technology is not going to impact residential real estate. People are going to need a place to live, and residential real estate will always be in demand today, tomorrow, and for the rest of our lives and for the lives of our kids and grandkids. So we want to take gains and buy unleveraged residential real estate that we can hold for decades. The other strategy that you can use to kind of get out is to take those gains and pay off all your debt, right? Debt freedom. I had this opportunity many years ago. I had a couple businesses that were doing really, really well financially, and I had the ability to pay off our mortgage on our primary residence. I did not take that opportunity, and then the market crashed, and I was stuck with that mortgage. And every single time I had to make a monthly mortgage payment, man, I felt regret because I did not take chips off the table. To illustrate what I just shared with you, I'm going to read more from The Education of a Speculator. This is from that same chapter, chapter 2 on panics, right? But few gain sufficient experience in Wall Street to command success until they reach that period of life in which they have one foot in the grave. This means, and I kind of experienced this too, that, when you're young, you don't have enough experience to know what to do as an investor, right? You take all this risk, and sometimes you win, sometimes you lose, but over time, if you stay in the game, you become a much better investor. So what he's saying is that the older Wall Street veterans have gained the experience to make proper decisions. And here's what these old Wall Street veterans do. Usually spend intervals of repose at their comfortable homes, and in times of panic, which recur sometimes oftener than once a year, these old fellows will be seen in Wall Street hobbling down on their canes to the brokers' offices. prices. So they've been sitting kind of on the sidelines, letting the market do its crazy thing. And then when a panic hits, these old guys grab their canes, hobble down to Wall Street, and here's what they do. Then they always buy good stocks to the extent that their bank balances, which have been permitted to accumulate for just such an emergency. The panic usually rages until enough of these cash purchases of stock is made to afford a big rake-in. When the panic has spent its force, these old fellows who have been resting judiciously on their oars in expectation of the inevitable event, the inevitable crash, which usually returns with the regularity of the seasons, quickly realize their gains, deposit their profits with their bankers or their over surplus thereof, and after purchasing more real estate that is on the upgrade for permanent investment, they retire for another season to the quietude of their splendid homes and the bosoms of their happy families. They get out. They invest in the stock market. When the stock market has attractive gains, they take their gains out, put them on the sidelines. When the stock market has gains, they take their gains out and they invest it in real estate for permanent long-term investment. Love or hate real estate, always in demand, right? AI is not going to impact the demand for real estate. It is going to be in demand for years and years to come. So you take chips off the table, use it to pay off your debt or to buy unleveraged residential real estate. And my suggestion is lower price starter homes. That's the pocket in the market that always has the most demands. So the goal of this video is to hopefully get you to think about the opportunity of taking some gains off the table, the opportunity to kind of think through everything right now in terms of the market risk, in terms of any gains you might be sitting on, and would it make sense for you to take a few chips off the table? You don't have to take all of your chips off the table, but maybe it would make sense to take a few chips off the table, use those chips to either pay off all your debt or to buy unleveraged residential real estate to create this financial base, to protect yourself from market crashes and to protect your family from yourself, from your greed. I was very greedy as a young man and it cost dearly, which is why I'm recording these videos. I'm hoping to help you avoid the same mistake that I made. If you would have any interest or would like to talk to me about investing in residential real estate here in Northeast Ohio, you should be able to schedule a phone call or a Zoom call with me at the link below. During that call, we could talk about different investment opportunities, how you can use residential real estate to create a financial base for your family. I hope this video was helpful. Check out chapter 2 in this book. That's awesome. And I will catch you in the next video.